Alright guys, so we were talking about real options the other day. We did the very first question. I said the three types of real options are such guys: growth option, abandonment option and timing option. The question that we did yesterday, good morning guys, online students. The question that we did yesterday as such beta was in relation to growth option. Yes or no? Now beta the next question, question number 58. Question 58 guys. Take material or not? One material to him. IPL is already in production of fertilizers. It is considering a proposal of building a new plant to produce pesticides. Suppose the present value of proposal is 100 crores without the abandonment option. However, if market conditions for pesticides turns out to be favorable, the PV of proposal shall increase by 30%. Present values beta will increase by 30% if the market conditions turns out to be favorable. That means 100 crores will become 130 crores. On the other hand, the market conditions remain sluggish. The PV of proposal shall be reduced by 40%. That 100 crores will become 60 crores in case the market conditions are not favorable. जब भी ऐसा देता है बेटा two prices, we are basically talking about risk neutralization or binomial model. Yes or no? You will have to take an average of the higher price and average of the lower price and equate it to fair forward price FFP under binomial model. हाँ या ना? उसके साथ ही बढ़ जाए बेटा, उसके बाद ही मटेरियल नहीं है वैसे भी मंजू शानदार. हाँ. In case the company is not interested in continuation of the project, it can be disposed of for an amount of rupees 80 crores. So subsequently say guys, if the market conditions are not favorable, without smiling as साथ बेटा, we can abandon the project for an amount of 80 crore rupees. इसका मतलब क्या है? जैसे वो decreases by 40% बेटा. If it decreases by 40%, will the present value come down to 60 crores? So instead of continuing the project, what will you do? Sell it. At what amount can you sell it? 80 crores. If the risk-free rate of interest is 8%, what will be the value of abandonment option? Varun wants to answer guys. Alright Varun. Others better. There are two scenarios given. We just have to arrive at value of abandonment option. कल बोला था बेटा, value of abandonment option will be a call option or put option first. Excellent. First identify that this is a put option. It is not a call option. So we are using binomial model as such guys to arrive at the value of put option. Can we do this? You have to use binomial model, arrive at the value of put. Binomial मतलब risk neutralization बेटा. Instead of writing O R D ये सब, you can directly compute average of upper price and lower price is equal to fair forward price. Try करोगे guys? वो टाइम पीरियड नहीं दिया guys, so we will have to just assume that the time period is 1 year guys. I repeat, time period is not given. Assume that it is दिया क्या 1 year? नहीं. So that market conditions turns out to be favorable, market conditions remain sluggish. We will have to assume it to be 1 year. Why do we need time period? For computation of FFP. FFP beta will be the compounded value of spot price. दे देना उसकी मटेरियल वापस. दो है ना, है उसकी मटेरियल. यस बेटा. Online students, but if you've understood the question, please arrive at the answer and type and send it. हाँ, यहाँ पे निकेत कैच. सिद्धार्थ पे भरोसा नहीं था बेटा. Huh? Yes, guys. Varun is already done with it, guys. He got the answer as 45 crores. क्या फर्क पड़ता है, कौन चेक कर रहा? गिवन इंफॉर्मेशन लिख के टाइम वेस्ट नको करो, पहले मेरे को आंसर बोलो, देन वी विल प्रोसीड. हाँ, क्वेश्चन क्या है कहते, खींच के लगा दो एक. किसी को आया क्या बेटा आंसर? हाँ, शुड आई स्टार्ट इट और आर यू डूइंग इट? वैल्यू ऑफ ऑप्शन आ गया. वो कितना है पी अप? 16.6904 is P up. Yes, beta. Krish has got probability of upside movement as 69.04. So probability of downside movement will be 30.96%. Alright guys, there's one more answer, 69.04% only. Abandonment guys is nothing but a put option. You have to realize that first. So what is the present value of cash flows today beta? Present value of cash flows today beta is 100 crores. This can increase to how much guys? This can increase by 30%. And the present value can become 130 crores if the market condition improves. If the market condition deteriorates, the present value can go down to 60 crores. Haya na guys. Assume time gap is how much? Time gap beta is 1 year. Using these two prices guys and a risk-free rate of 8% as such beta, you will have to arrive at P up and P down. Everyone knows how to compute P up and P down, right? It is the average of higher price and average of lower price that is equated to fair forward price. याद है नहीं है? The other one under binomial model we used to write R minus D divided by U minus D, where R is the compounded value of 1 rupee, D is the downward movement, U is the upward movement. So guys, higher price is 130 crores multiplied by P up plus lower price is 60 crores multiplied by P down. This should be equal to fair forward price S naught into 1.08. S naught into 1.08 guys. किससे equate करें तुम लोग? बेटा कुछ भी नहीं दिया तो डायरेक्टली टेक डिस्क्रीट कंपाउंडिंग. नो बेटा, वेयर इज इट गिवन ई वैल्यू इन द क्वेश्चन? लड़ ले रहने दो. This is what you're going to write better. Using this, you're going to get P up and P down. To be Krish, continuous compounding here. कितना आ रहा है बेटा P up using this? 68.57. 0.6857 guys, 68.57%. Probability of downward movement will now be 0.3143. Probability of upside movement is 0.6857. Probability of downward movement is 0.3143. Is everyone clear till this point? Yes or no? Abhi, tell me guys, what is the value of abandonment option? At least now. Yes, better. Yes, guys. Are we done with it? Is everyone done with it, guys? Did you get P up and P down 0.6857 and 0.3143? After this, but are going to arrive at the value of abandonment option. Kitna hai value of option? 6.28 crores. 5.82. Now, guys, once you compute P up and P down as such, guys, please understand. If market condition as such, guys, if market conditions are not favorable as such, beta, or remain sluggish, then present value is only kitna? Present value is only 60 crores. But can we sell the project, guys? However, we can exit from the project at an amount of, we can exit from project at 80 crores. नहीं समझ में आ रहा तो सुन लो पहले. So this 80 crores के साथ बेटा will become what? Strike price or exercise price के साथ बेटा for abandonment option. This 80 crores as such, guys, will become the strike price as such, guys, for your abandonment option. Any doubt in this, guys? So now beta, you're starting with an S naught of 100, guys. It can go up to 130 crores. It can come down to 60 crores. At 130 crores as such, guys, what will be the intrinsic value of put option? Will you exercise, guys, the put option at an amount of 130 crores? No way. The intrinsic value beta would be 0. But if the price turns out to be 60 crores, you will exercise the option and you will sell away the project at an amount of 80 crores, resulting in an intrinsic value of 20 crores. The probability of upside movement is 0.6857. The probability of downward movement is 0.3143. What is your expected benefit on expiry? Expected benefit on expiry, guys, will become 0 into 0.6857 plus 20 crores into 0.3143. कितना है बेटा ये? 6.286. This is the expected benefit on expiry. Value of option, guys, will be the present value of benefit. Wouldn't it be the present value of benefit, guys? So 6.286 crores ko beta, you will discount it for a span of 1 year. How much is that? 5.8203 crores. This will become the value of abandonment option. The option that you have to exit is basically worth 5.8203 crores. समझ में आ रहा है नहीं आ रहा है? Make a note, guys. P up and P down हो गया है, right? Yes, beta, make a note of it. Perfect, guys. 5.818. Online students, proud of you. Yes, beta. Remember, this option value will hold good if and only if probabilities beta are based on binomial model. Real life में probabilities might not be based on binomial model. Then the answer will vary. पहले कॉपी कर लो ना बेटा, मार ही दूंगा. आ गया guys? We'll start the last question guys on real options, and then we can start off with the next chapter after doing a couple of small things. Old batch students, whoever is viewing this video guys, remember that you're supposed to know the basics of binomial risk neutralization as well as Black-Scholes model to solve all of this. Yes, beta. Yes, kids. Shall we start the last question? Question number 59, guys. Suppose MIS Limited is considering installation of solar electricity generating plant for lighting the staff lighting the staff quarters. The plant shall cost 2.5 crore rupees and shall lead to a saving in electricity expenses at the current tariff by rupees 21 lakhs per year forever. ठीक है, perpetual cash inflow. By investing 2.5 crores, we are going to save an amount of 21 lakh rupees. However, with change in government and state, the rate of electricity is subject to change. Accordingly, the saving in electricity can either be 12 lakhs or 35 lakhs per year and forever. So electricity rate as such beta can either turn out to be 12 lakhs or it can either turn out to be 35 lakhs. Again beta time period नहीं दिया हुआ है कि ये कब तक हो सकता है, but obvious what will you assume time gap is 1 year. They're supposed to give this. Are we clear? The weighted average cost of capital is 10%, risk-free rate of return is 8%. Decide whether the project should be accepted or should you wait and see. Weighted average cost of capital is given to evaluate guys like a normal capital budgeting question. ठीक है? How will you compute NPV of any project? Present value of all the cash inflows minus present value of cash outflows. If you start the project today guys, what is the saving in electricity that is there? Likely 21 lakhs. It is subject to uncertainty guys. Anything can happen a year later. We have no idea, but as of now as such guys, we know that the cash inflows are 21 lakhs. 21 lakhs. Present value of constant perpetuity कैसे करते हो? Cash flow divided by discounting factor. Should I divide by 8% or should I divide by 10%? 10%. because that is the weighted average cost. I'm not valuing an option now as such, guys. I'm computing present value of cash inflows for the company. And for the company, guys, capital budgeting decisions are not taken at risk-free rate. They're taken at cost of capital. The cost of capital of the company is 10%. So you will write 21 lakhs divided by 10%. Present value of cash inflows will become 2.1 crores. 21 lakhs directly divided by 10% बेटा. तो क्या करा? Divide by 1.1 करा ना. Guys, 21 lakhs divided by 10%, 2.1 crores. What is the investment, guys? 2.5 crores. So if you start up the project today as such, guys, the NPV is expected to be negative. It is negative 40 lakhs. How negative 40 lakhs? Benefit that you're getting is only 2.1 crores, but the investment that you're going to make beta is 2.5 crores. This is, will you want to start the project now? The answer is straightforward, no. Even at the current rate of electricity as such beta, it is not viable. But what will happen if you wait and see? There are two scenarios possible. One is, it can go up to 35 lakhs. The other one beta is it can go down to 12 lakhs. Guys. So, can you arrive at it? If it goes up to 35 lakhs, what will happen? If it goes up to 12 lakhs, what will happen? The answer given to this beta in the new study material is incorrect in my opinion. The answer that was given in 2008, the same questions as such, guys, were there in the material in 2008. They removed it, they got it back, it became new syllabus. But anyways, guys, same option का जितना भी content था पहले भी था. Back then the answer given was correct. Anyways, guys, you tell me, guys, how will you compute probability of upside movement, probability of downside movement? वो भी करना है. Option valuation में बेटा अपन. How will you compute? See, guys, on the face of it, someone might say कि sir, अगर अभी project start मत करो, wait for a year. If the price turns out to be 35 lakhs, start करो. If the price turns out to be 12 lakhs, scrap the project. Won't that be the best situation, guys? Because 35 lakhs अगर saving आ रहा है, if you wait for a year, what will be the amount of this thing, guys? Present value of cash inflows? 3.5 lakhs, 3.5 crores as such, guys. That minus 2.5 crores. Our NPV will become positive 1 crore if you wait for a year. Won't that be positive 1 crore? If the rate turns out to be 12 lakhs as such, guys, NPV would be negative, but you might not want to start the project as such, guys. So what will happen to the NPV? Matlab, you will say that project will not be taken up because we have an option to do that. You will say better that it is 0. समझ में आ रहा है? Shall I present the answer? Everyone understood the question? कर रहा है. ठीक है. P up and P down compute करके बोलो बेटा. I'll wait for a minute. Students have requested that they would want to compute P up and P down. It's Siddharth. Yes, guys. $46 point value, present value, सब करके. P up is 46.4349%, 435%. What are you comparing with beta? Present spot क्या लिए? You took 210, right? Yeah. So this is where beta ICI took 2.5 crores, which does not make sense because 2.5 crores is not the spot price, it is strike price. They took S naught, but जो 15 साल पहले material में question था, they took it as 2.1 crore only as such guys back then, and the international syllabus where the question was covered, even there it is 2.1 crores only. There's no point beta in comparing with strike price. When you're computing P up and P down as such guys, you compare it with the base benefit. Today present value beta is 2.1 crore. It is not 2.5 crores. So you start with the base of 2.1 crore, compare it with 3.5 crores or compare it with lower side कितना आ रहा था 1.2 crores. Then compute guys your probability of upside movement and downside movement. Are we clear about this? Chalo guys, let us start writing the answer beta. So if we commence or if we start the project today beta, what is going to happen? If we start the project today, क्या होगा beta? What is your saving guys per annum? 21 lakhs. And this is a perpetual cash flow. Hi Anna. What is our cost of capital beta? Cost of capital is 10%. Do not forget guys, for capital budgeting we use cost of capital. All the while we have been using risk-free rate because that was not specific to a company. It was valuation of financial instruments. Now we are talking about capital budgeting, evaluation of a project. For capital budgeting beta we use cost of capital and not risk-free rate. Option valuation के लिए बेटा correct है जो तुम लोग करे. You will have to use risk-free rate only and not cost of capital. The present value of savings guys will be equal to cash flow divided by discounting rate because it is constant perpetuity. So that beta will become 21 lakhs divided by 10%. It will become 2.1 crores or 210 lakhs. Yes or no guys? What is the amount of investment beta? Investment to be made as such guys is 250 lakhs. NPV guys, if the project is commenced today, is negative. 210 minus 250, we will get negative 40 lakhs. Will it be beneficial to start the project? No. If you start the project now guys, there's a negative NPV of 40 lakhs. समझ में आ रहा है नहीं आ रहा है कैसे? See guys, the whole question should have been आज positive रहना था, मतलब even on the current date should have been positive. Wait and see what is the positive benefit, then compare which is giving us a higher positive benefit. Then you could have spoken about should we start today or should we wait and see. Ab jab today is not an option only, the only option that you have is wait. Why the hell do you even need probabilities? In real life you will not want to compute any probabilities. No. When will you want to compute probabilities and check if you are already getting a positive benefit today, but you will still want to wait and see if this can be a higher positive benefit? Then it makes sense as such guys to value the option. समझ में आ रहा है नहीं आ रहा है? If we start the project today as such guys, NPV would be negative 40 lakh rupees. वो कहाँ गया तीसरा बंदर? ऑफिस सुबह 6 बजे. अच्छा. Yes guys. Are we clear about this? Now guys, if we wait, assume guys time gap कितना है? Please write that. Assume time gap beta is 1 year. Now guys, I told you beta that there can be two scenarios. सब लोग लिखे बेटा NPV negative 40 lakhs तक. Did you all write guys till an NPV of negative 40 lakh rupees? Now if you wait and see as such beta, assume time gap is 1 year. What will happen beta? If savings per annum, एक बार सुन लो वापस. If savings per annum as such beta is 35 lakhs, what will be the present value of savings? Present value of savings as such beta would be 35 lakhs divided by 10%, 350 lakhs. And if savings per annum as such guys is, दूसरा scenario क्या है? 12 lakhs. Present value of savings as such guys will become 12 lakhs divided by 10%, 120 lakhs. So, abhi beta, S naught, today's saving as such guys is how much? 210 lakhs. This 210 lakhs can either increase to 350 lakhs or can decrease to 120 lakhs. So ICI kya kiya beta, in the current material they took it as 250, which is incorrect. You cannot compare with the strike price of 250. We're talking about probability of what moving upside and down? Spot price. Every question of option valuation guys, we did it spot price should increase to a particular price. We never compounded strike price and compared it with the possible prices on expiry. So here guys, how will I compute probability beta? I'll write 350 into P up plus 120 into P down should be equal to FFP. 210 into risk free rate kitna hai? 8%. This is FFP guys. So 350 P up plus 120 into 1 minus P up is equal to 210 into 1.08. 226.8. How much is P up that you got beta? Compute kiya tha na to? 46.435% or 0.46435 beta. How much will be your P down guys based on this? 0.53565. 53565. Huh. This will become your P down. Now you have your P up and P down guys. Abhi tell me better. When will you want to commence the project as such guys? Will you commence the project at both the scenarios or will you commence the project? Timing option is also a call option guys. You will want to wait and see whether you want to invest or not. It is not a put option. Hayana. So if the price turns out to be 350 lakhs as such guys, what will be the NPV? 100 lakhs. Hayana. ये कितना बोला probability में? 0.46435. If the price turns out to be 120 lakhs as such guys, I'll write 0. यहाँ पे again ICI wrote negative 1.3 lakhs, negative 1.3 crores. What is the whole option? Matlab, when you say guys that you will take a negative NPV of 1.3 crores, you're telling us that you have an obligation. Even if you wait, no matter what happens, you're going to start the project. That is not the question. Is about should you accept the project or not as such guys. So यहाँ पे you will, what is the answer that I'm writing? Do not accept the project as benefit is less. Hayana. Now guys, what will be the value of this option? What is the expected benefit on expiry? Expected benefit on expiry guys, you will write 100 lakhs multiplied by 0.46435 plus 0 into probability was 0.53565. What is this beta? 46.435 lakhs. Abhi kaise compute karoge? Present value of benefit guys will be 46.435 divided by 1.08. But anyways beta, because the expected benefit is positive, it is worthwhile to just wait and see. ठीक है, ये कितना है? 42.43 lakhs approximately. ठीक है बेटा, समझ में आ रहा है गाइस? प्लीज मेक अ नोट बेटा. कहाँ से लिखना था? ये लिखे ना? नहीं लिखो बेटा. इफ वी वेट, Yes beta, please compute it. Kirtesh is doing the next chapter, थोड़ा जल्दी करो. Yes beta, are we all clear about this? What will be the conclusion, guys? The company should wait for a year, guys, and start the project if the price turns out to be 35 lakhs. Conclusion beta will be the company should wait for a year and commence a project if the price or if the savings beta turns out to be 35 lakhs. If the savings turns out to be 35 lakhs. The company should wait for a year and commence the project if the price turns out to be 35, if the savings turns out to be 35 lakhs. So these are all the questions, guys, related to real options. वहाँ पे नीचे लिख लेना बेटा, ICI का आंसर डिफरेंट है क्योंकि वो बाद में वापस सब लोग मैसेज करके सर व्हाट शुड वी फॉलो बोल के. To compute probabilities as such, guys, they've compared it with what? Strike price, which is incorrect. You cannot take strike price, guys, for computation of probabilities. You're supposed to compare it with savings that is arising today, 2.1 crores. Are we clear, guys? Any doubt in this? Just a little theory part as such, guys, before we wind up this chapter. And then we'll start off with portfolio, guys. So we did real options as such beta, we did exotic options the other day, yaad hai? Both of them have been introduced only under the new syllabus as such, guys. Apart from that, guys, we have something called as credit derivatives. That's on page number 5.16. Pura turn karne ki zarurat nahi hai. Suno. When you say credit derivatives as such, guys, we are basically talking about whenever you invest in any security as such, guys, even in bond valuation, I told you guys, when you're investing in a debt security, what are the risks that you are exposed to? Interest rate risk. Interest rate risk is price risk or reinvestment risk. Bond valuation, yaad hai? Interest immunization. If you invest in a bond for a period equal to the duration of the bond as such, guys, you will be protected against interest rate changes. So when you invest in a bond, guys, the primary risk that you're exposed to is interest rate risk. If the prevailing market interest rate increases, value of a bond will decrease, but your reinvestment income will increase. The other risk that you will have beta when investing in a bond as such, guys, is credit risk. What is credit risk? the probability as such, guys. What if the other person defaults as such, guys? I gave the example of Adani bonds then. I said just because there was a rumor as such, but people thought that there might be a default, and that is why the bonds were trading at a discount of 30% to fair value. People were willing to sell the bonds at a cheaper rate in the market as such, guys. So that is credit risk. Whatever hedging techniques that we have spoken about as such, guys, in most of the chapters talks only about market risk, which is interest rate risk, foreign exchange risk. If there is foreign exchange risk as such, guys, can you hedge that foreign exchange risk? Yes, you can hedge it as such by entering into contracts as such, guys, for foreign exchange. It can be forward, it can be futures, it can be the multiple hedging techniques. We'll be learning that under forex chapter better. If it is interest rate risk, again we can enter into hedging techniques. There's another chapter called as interest rate risk management that purely concentrates on how do we hedge our interest rate risk. We spoke about duration, interest immunization, but there are other ways better of protecting your interest rate risk. समझ में आ रहा है? So you can protect interest rate risk, you can protect anything related to market as such beta can be protected by hedging. Credit derivatives have been introduced as such beta in order to hedge your credit risk. The whole concept of credit, is a brief introduction है beta to understand why the concept of credit derivatives. Credit derivative is a product as such beta wherein you're getting protection against credit risk. We are not trying to hedge market risk, we are not trying to hedge reinvestment risk or price risk. The only risk that we are trying to hedge beta under credit derivatives is your credit risk. Basically beta, you have an underlying portfolio of receivables. It can be bonds, it can be any investment as such, guys. There's a possibility as such beta that there can be a default on that underlying security. You would want to pass on that risk to someone else. It is like insuring yourself. Sir, why will you pass on that risk to someone else? If you stationery खुली थी अभी. अच्छा, if you generation बेटा आज का हाँ, if you pass on that risk as such बेटा Zepto क्या कहते book वही हाँ, if you pass on that risk as such, guys, to someone else, the other person is undertaking the risk, guys. That other person will also be compensated in the form of premium. ठीक है? I'm just trying to, you will be wondering as to why will someone want to take that risk. It's like this, beta. You take an insurance as such, guys, from a car insurance company or from a medical insurance company. You'll be like, why are they undertaking that risk? Why are they undertaking that risk? Matlab, are you not paying premium to them? Just in case something happens as such, guys, they will be liable to repay the amount. That is the whole concept of insurance. Same thing happens under credit derivatives. One way of entering into or one way of protecting yourself as such, guys, against credit risk is by creating something called as CDO, collateralized debt obligation. Securitization के बारे में सुने कभी? Asset securitization. Asset securitization, guys, I'll just give a brief idea about asset securitization. Say there is a bank as such, guys, that has a pool of car loans. There is a bank as such, guys, that has a pool of car loans. They do not want to remain in car loans, or the loans as such, guys, are say turning out to be NPAs as such, guys. So what they can do beta is create a special purpose vehicle, SPV, pass on this car loans. ये FM में था guys, CA Inter. ऐसे देख रहे हैं, पहली बार पढ़ा रहा हूँ. But anyways, you will pass on this car loans का ownership as such, guys, to this special purpose vehicle. Loans बेच दे रहे हो तुम लोग अपने book से. What will this special purpose vehicle do beta? They will issue certain receipts to investors. Collect money from investors. That money will be passed on to your bank. So we are basically converting a receivable back into cash balance. Why will they want to do it? Either you do not want to remain in that particular segment, or you are in need of cash. Not always better you can raise money. The option is not always. You know, banks have something called as capital adequacy ratio. Capital adequacy ratio mein, guys, if you increase your borrowings and then give more loans, your capital adequacy ratio gets affected. Capital adequacy ratio is the proportion of equity and other funds that you should have as such beta, tier 1 capital, tier 2 capital and all of that. But isse kya hoga beta, my capital adequacy ratio does not get affected. If I sell off my receivable and convert that into cash, my CAR does not get affected because I am not increasing my liabilities. What am I doing? Removing one asset from the books, bringing in cash, using that cash as such beta to give more loans. So the objective behind this beta is, first one, you do not want to remain in the business. Second one, you want to raise more funds. Third case, the securities are stressed securities. They say India has created a bad bank. The whole objective of bad bank as such beta is to transfer this NPAs as such beta to that at a cheaper rate. Valuation होता है उसका. You transfer. अगर कोई NPA समझो, I gave a loan as such guys, say of 10 crores to someone that turned out to be a non-performing asset. ठीक है? What can I do? I can sell off this asset as such guys to someone who's willing to buy this at a price. That discount will depend on the probability of default, probability of recovery. There have been instances where our banks have sold loans receivables at a discount of 80% also. मतलब books में बेटा loan is appearing at 10 crores, they sold it upfront for an amount of only 2 crores. अब सामने वाले का headache, whether is recovering 2 crores, whether is recovering nothing, or whether is recovering way more than 2 crores. Why will that person take this? He is the one who's willing to take that risk. Either if they get compensated by a very high amount. Otherwise, they end up losing that. They're taking a very high risk. But if return materializes, the return is also going to be very high. Are you getting the point? So guys, yes, CDO works on a similar basis. CDO is basically better creating a pool of bonds, selling off that pool of bonds as such guys to a special purpose vehicle. That special purpose vehicle as such beta is raising money as such guys from investors, and that investors beta will be passed on to, that money as such guys will be passed on to your entity. Zaruri nahi hai bank as such beta, it can be created by any entity, because not necessary that the underlying has to be a loan. The underlying can be bonds. You have a you have a bond portfolio of $1 billion. You want to remove the credit risk from your balance sheet, you can sell that to someone else and raise money like this. Are you getting the point? Yes or no? अब इसमें guys, ये special purpose vehicle जब issue कर रहा है receipts, they divide them into multiple categories called as senior note, junior note, senior maybe most senior and all of that comes, junior note and equity. In case this special purpose vehicle incurs loss, who will take the first hit? Equity. If they have say a loan portfolio of $1 billion, senior note का $500 million है, this is say $200 million and this is $300 million. To the extent of first $300 million, who will have to take a hit? Equity people. Sir, why will they take a hit? They are the ones who get residual interest. Just in case better they realize more money, who will get a higher return? The equity. If the losses exceeds $300 million, who will take a hit? Junior note. After that comes senior note. Senior notes are usually better high credit rating. They get a lesser return. Junior notes will get a little higher return. Rest every return will go to equity shareholders. ये होता है CDO. CDO comprises of transferring your assets. Are we clear? You're transferring your asset, loan backed whatever securities. Beta, the mortgage crisis, prime lending crisis was all based on the same concept as such guys. They transferred asset-backed securities, mortgage-backed securities to entities, and that in turn beta issued securities. वो multiply होते जा रहा था. So that was a whole crisis of 2008 in the US markets as such guys, based on the concept of CDOs only. ये समझ में आया? What is the objective of this? Transfer of credit risk. Did we transfer of the risk? Yes. So what I explained to you beta is a concept of cash CDO. Like cash CDO, there is something called as synthetic CDO. A synthetic CDO guys does not in cash CDO अभी समझ में आया ना क्या बोला मैं तुम्हारे को? You're transferring what guys? An underlying investment of bonds to a special purpose entity. That special purpose entity is raising money and passing on the money as such guys to the entity that has transferred the risk. अपना काम खत्म. We have passed on the risk to someone else. Synthetic CDO guys involves transferring only credit risk without transfer of economic interest, with or without mediation. Are we clear about this guys? So you are transferring only credit risk, but you are not transferring the economic interest. मैं bonds नहीं बेच रहा हूँ. I am only transferring credit risk. It is like taking pure insurance without. First वाला क्या था बेटा? You want to protect yourself against the asset. First option was like sell the asset. Did we not do that in the first case? We sold the asset only as such guys altogether in order to protect ourselves. Under synthetic CDO as such guys, you are not transferring the underlying asset. What are we transferring? Only the credit risk. Sir, अब only credit risk कैसे pass होता है? So even here a special purpose vehicle is created. The people who are investing or who are subscribing to special purpose vehicle are basically promising that in case there is a default, they will be the ones who will be liable to pass on the money to the entity. Let's just say guys, we four of us create that SPV. We become the investors. Me, Ishan, Niket and Siddharth become the investors of the NPV. All of this loan bond portfolio is owned by, say, Dheeraj. Dheeraj has created the SPV. We have become investors. Today, whether we are passing on that money or not necessary. Few of them, Dheeraj might insist कि मेरे को पैसा चाहिए ये SPV में, because what if tomorrow you do not pay? So if that happens, it is called as a funded synthetic CO. Funded matlab we will deposit money with SPV, but that money cannot be passed on to Dheeraj. He never sold the asset. Did he sell the asset? So what will that money be done with? It will be invested in government securities or very high credit rated securities. Just in case there is a default on a later date, then these securities can be sold and the money will be passed on to Dheeraj. So इस सब में धीरज क्या कर रहा है? He will pay a premium every year to SPV. What will that SPV do? Give this in the form of return to whom? The investors. We are the ones who are at the receiving end of that premium. Are you understanding this, guys? Synthetic CD. Synthetic मतलब क्या guys? झूठा मोटा. It is a fake debt obligation. Fake debt obligation मतलब I am not selling the asset. I am only transferring the credit risk. समझ में आया नहीं आया? It's like this, guys. Me approaching Niket and telling him that I invested $100 million in the bond of Adani. I want you to buy the credit risk. He's like, ठीक है, I'm willing to buy credit risk. Pay me a premium of $0.5 million every year. I will continue to hold the asset, $100 million का. I will continue to get interest from Adani group of entities. Just in case there's a default on a later date as such, guys, I'll go and approach him. याद है? He will have to pay me that. Why is he willing to do that? Because he's taken a premium of $0.5 million from me every year. So this synthetic CDO can be funded. It can be partially funded. It can be unfunded. If it is unfunded, it is again subject to risk. यहाँ पे दूसरा credit risk आ रहा है. What is that default risk? What if these investors default on a later date? Are we understanding, guys? उसके लिए वापस credit protection and all. There are multiple instruments, guys. India में बेटा such instruments are not that famous as such. US markets as such better is known for creating such complex instruments. Some instruments which even the investors do not understand what is happening. Because this valuation, guys, is based on probability. How much return should the senior guy get? How much return should the junior guy get? How much return should the equity guy get, guys? Is heavily based on probability. They perform probability table as such, guys. 1% default, 2% default, 3%. As 100 different scenarios they take and then they compute what is the expected return that can be offered. समझ में आया? Difference between cash CDO and synthetic CDO. First, understood the concept of credit derivatives. Credit derivatives is to hedge credit risk. For that, we are talking about CDO. CDO में the first one was cash CDO. The second one is synthetic CDO. Third one beta is arbitrage CDO. Arbitrage CDO, guys, is basically where you are buying assets or CDs. ये जो debt obligations है from the market at a lower price. मतलब you see that there is a mispricing as such, beta the debt obligations are available at a lesser price. So you buy that and you are raising money at a lesser cost. I borrow money, say guys, from Dheeraj at a rate of 7% and I'm investing this money, guys, in debt obligations that are trading at a little lesser price in the market, on which I can generate a return of say 10%. So this differential 3% beta will become my gain. I'm borrowing at a lesser rate and I'm investing that money in securities that are offering me a higher rate. That is arbitrage CDO. Are we clear? ये हो गया one type of insuring. The second one is such, guys, risk involved beta हर एक risk है CDO में. What if the other person is not able to realize? What if there is repayment? What if there is reinvestment risk, foreign exchange risk? Every risk will be there in CDO. To whom? To the investors of CDO, not the one who's passing on the risk. All of this risk is now passed on to the investor. There is something called as credit default swap. You are supposed to have a basic understanding of all of that as such, guys, because they've been introduced for the first time. ये बहुत पहले भी थे, guys, but then they never asked it in the examination for some reason. But now, because they've been introduced for the first time again, we should obviously have a basic knowledge of all of this. Credit default swap का मतलब होता है बेटा, you have given a loan to someone. If there is a default on that, you swap your credit someone. With sir, अब ये भी तो synthetic CDO में भी तो यही किया है. Synthetic CDO में बेटा there was a special purpose vehicle created. That special purpose vehicle can have hundreds of investors. Not a single person is taking that risk. A credit default swap is a contract between two entities. Direct contract between two entities without creating a SPV. That's the only difference. a credit default swap beta, they say that there's three things. There is credit, there is default, there is swap. Swap is exchange. So say guys, I have अभी जो example दिया था, I have entered into a contract with Niket. That was a classic example of credit default swap. ठीक है? The example that I just gave as such guys with Niket was nothing but a credit default swap, because I did not create a separate entity guys to exchange the risk. I am only entering into a direct contract as such beta with Niket. Is that clear? Will there be exchange of premium? Yes, there will be exchange of premium. CDS can be settled on a net basis, that is cash settlement, or it can be physical settlement. So physical settlement kya hoga? I invested $100 million. So this fellow Niket will tell me, take your $100 million, give me the underlying bonds. I will transfer the ownership of bonds to him and I will take $100 million from him. That is physical settlement. Cash settlement, Niket will tell me the value of this bonds in the market has come down to $60 million. So take the difference, $40 million from me, teko bechna hai, $60 million ke bonds market mein bech de. So that is cash settlement. Under cash settlement, we will take the difference between the value, matlab the amount invested, and the market value, settle it in cash. Under physical settlement, I will pass on that asset itself to the other person, and the other person will have to give me the entire amount upfront. Uska botheration abhi, how much is he realizing from that? Is his headache. Are we clear about this? That's a credit default swap. Both the instruments guys are to exchange or hedge what? Credit risk. Any doubt about it? Yes or no? ये जो निकेत है बेटा, he becomes writer now of credit default swap. Are we clear about this? I'm the investor as such guys, the original investor. He is the writer as such beta, and there was someone else who has borrowed money. यहाँ पे Adani Group. Adani Group has borrowed $100 million. I was the investor, and this guy here as such beta is the writer of the credit default swap. So this is what you should know about credit derivatives. Any doubt in this? He is paying me the differential $40 million. 60 में मार्केट में बेच दे रहा हूँ उसको बेटा. he took premium every year, no, that is his obligation. अभी तू ऑप्शन राइटर को बोलेगा क्या जाके कि भैया तेरा नुकसान हो रहा है, छोड़ दे, मत दे पैसे बोल के? The whole option of you buying an option was that only, no? Why did you pay premium upfront? Will you go and tell the insurance company गाड़ी ज़्यादा ठुक गई, तू मत दे यार, अच्छा नहीं लग रहा, you are giving me so much money? Are we understanding this guys? So see guys, the entities that undertake CDS beta might not do it with a single person as such beta, they do it with multiple persons. So the volume that they're trading at as such beta might be very high. So not necessary that everything should get defaulted as such beta. 1 in 10 entities or 1 in 100 or 200 entities beta might default on their bonds. ऐसा रोज कितने बार सुनते हो बेटा that someone has defaulted on their debt बोल के? ऐसे थोड़ी आता है. Are you getting the point guys? And if the instrument beta in which I have invested is actually so useless, then the other person beta will demand a very high premium. He might not do it, or the premiums will be very high. Is that clear? जैसे बेटा market में there are few vehicles as such guys that have a higher premium. You know this car insurance premium vehicle type पे भी depend होता है. Few companies as such guys, they know that the problems with these vehicles are high as such guys, so the probability of accidents might be high, and they charge a higher premium for such vehicles. बीच में एक दो companies were not insuring one particular model of a car as such guys. They're like नहीं, मतलब the probability of risk is very high, there is no point in. So this is all probability, no? They know that the risk element is very high, they will not want to do it. अब ये सोचो बेटा, at the age of 25, in case you are diagnosed with high blood pressure, and that is reported as such beta, you will never get a medical insurance in your life. If you're getting blood pressure at the age of 50, 60 as such guys, acceptable. With age as such guys, everyone's blood pressure as such beta will increase. At a young age as such guys, if you are having these issues, none of the insurance companies would want to come forward beta and give you insurance. The risk element is very high. Are you getting the point? Same thing beta. तो क्या सीखे इससे? कंट्रोल में रखो सब चीजें. Are we clear about this guys? Any doubt in this? समझ में आ गया क्या है? Now guys, थोड़ा लिखेंगे बुक्स में little so that you have a little summary of all of this. बेटा credit derivatives बोल के लिखो. ये देखो यही अच्छा नहीं है सर, आप भाषण दो ना, हम सुन रहे हैं ना बोल के. Credit derivatives. शक्लें सीधी and write credit derivatives. Karan, looking for someone better? नहीं आई क्या? हाँ. What is credit derivatives as such, guys? This is hedging. Hedging, guys, or it can be anything for speculating on credit risk. On credit risk. So whatever financial instruments that we have learned so far as such, guys, financial instruments covered earlier were hedging which risk? Covered only market risk. Yes or no? When I say market risk as such, guys, we spoke about price risk, interest rate risk, foreign exchange risk, foreign exchange risk. Now, what are the instruments that we're talking about as such, guys? The first one is CDO. This is executed through what? Special purpose. Special SPV बोलते हैं बेटा उसको, special purpose vehicle. Executed through special purpose vehicle. This is executed through special purpose vehicle. उसमें first क्या है बेटा? Cash CDO. The underlying bonds or assets subject to credit risk are transferred to subject to credit risk are transferred to whom, guys? Are transferred to SPV. SPV raises money from investors, and hands it over to the entity. Hands it over to entity. Just for our understanding as such, beta. So this is, so we had certain bonds, beta. We removed it and we transferred it to SPV. What is the SPV doing, beta? It is raising money from investors, and that money as such, beta, is passed on to the entity. It is raising money from investors, and that money will be passed on to the entity. ये investors का classification क्या रहता है बेटा? How do you classification of investors? Equity, highest risk. Losses are first adjusted against their share. Yes or no? Losses are first adjusted against their share. Next beta, junior debt. Finally, अब समझ में आना बेटा, few companies use the word senior notes, junior notes. This is all in case something happens with, जैसे companies also issue बेटा senior debt securities. Senior debt securities have the highest protection. Just in case something happens to the organization, the senior notes as such, guys, will be subject to a lower risk. Tata's के balance sheet में भी देख लेना, you will see senior notes being issued. So that is the same concept. Junior debt and senior debt. This has the least risk as such, guys. Least risk and the least return also. हाँ या ना? Least risk and least return. क्या हुआ बोल? वो ब्रैकेट में क्या लिखा? Highest risk, losses are first adjusted against their share. Are we clear about this? What is synthetic CDO guys? ये लिख लिया ना बेटा सब लोग? Synthetic CDO. Synthetic CDO beta is transfer of only credit. ये नहीं लिखे ऊपर का? नहीं लिखे तो I'll wait guys. कुछ बोले तो समझ में आता. What is the benefit of? You might not always want to sell the bonds as such beta. You will only want to protect the credit risk. हर एक एंटिटी फाइनेंशियल एंटिटी नहीं होती ना बेटा. नॉट एवरीवन हैज एन ऑब्लिगेशन ऑफ कैपिटल एडिक्वेसी. द होल पॉइंट ऑफ व्यू इन्वेस्टिंग इन बॉन्ड्स एज सच बेटा इज टू जनरेट रिटर्न. So the option of selling bonds is not always a scenario. Most of them simply enter into credit default swap. Best. Why not? Why create an SPV also? Forget that. So individual entities which are not pure financial entities, but they prefer credit default swaps and not going through the option of CDOs. Synthetic CDO guys, transfer of only credit risk without transferring the underlying asset. The underlying asset. To whom guys? To SPV. To SPV. Premium will be paid. Premium will be paid to SPV, which will be the return distributed to किसको बेटा? Investors of SPV. Premium will be paid to SPV guys, which will be the return distributed to the investors of SPV. Investors of SPV. Are we clear about this? इसमें फंडेड का मतलब क्या होगा बेटा? Investors of SPV are passing on money or passing on money better to SPV, which will be invested in low risk securities. Such investment better is what beta? Like margin protection. Yes or no? Unfunded में क्या होगा बेटा? If there is a default on the underlying asset, the investors will have to pay money. Unfunded में guys, if there is a default on the underlying asset, the investors will have to pay money. That is synthetic CDO guys. Partially funded भी रह सकता है guys. Combination of these two. Are you all clear about the concept guys? CDO, cash CDO, synthetic CDO. थर्ड वाला क्या बोला था बेटा मैं? Arbitrage CDO. Arbitrage CDO क्या करता है? Funds are borrowed at a lower rate and invested in CDs which generate a higher return. Invested in CDs which generate a higher return. लिखे ये मैं क्यों लिख रहा हूँ कि डिक्टेट कर सकता था ना यार. The first one was CDO. What was the second instrument beta that we spoke about? Credit default swap. What will happen under a credit default swap, guys? Credit मतलब क्या guys? Investment in bond or loan offered to someone or loan given. Next beta, default an underlying instrument. Swap. Credit risk is exchanged with another entity. Credit risk is exchanged with another entity. Example लिख लो बेटा. A invest $100 million. A invests $100 million in bonds of XYZ. A buys CDS from B. Annual premium to be paid is $0.5 million. Annual premium to be paid is $0.5 million. So here XYZ is the borrower, beta. A is what? The investor. He is a buyer of CDS. B is whom, beta? Writer of CDS. So if default is made by XYZ, who will be liable to pay? B will have to compensate A. B will have to compensate A. If there is a default made by B, guys, XYZ, B will have to compensate A. Hero. कैश सेटलमेंट एंड डिलीवरी सेटलमेंट कैसे काम करेगा बेटा? कैश सेटलमेंट में क्या होगा? सो इफ मार्केट वैल्यू ऑफ XYZ bonds is $60 million, then B will compensate how much? B will pay differential $40 million to A. Yes or no? B will pay differential $40 million to A. Physical settlement में बेटा A will transfer entire bonds to B and B will pay. A will transfer bonds to B and B will pay $100 million. Under physical settlement, guys, A will transfer the entire bonds to B and B will pay $100 million. CDS over the counter derivatives है बेटा पूरे. मतलब you find another party and then you execute. All of these guys are over the counter derivatives, guys. These are not exchange traded derivatives because this has to be a specialized contract between two people. जो भी अपन पढ़ रहे guys, credit derivatives, all of them are over the counter derivatives. Yes, guys. मॉर्टगेज बैक्ड सिक्योरिटीज थे, बट देन हाँ मैं अभी पूरा देखा नहीं डिटेल में, देख के आज रात में वही देखता हूँ, फिर आई गेट बैक टू यू ऑन दिस टुमारो मॉर्निंग सर। अरे यार तुम लोग इतनी चीजें समझा रहा हूँ, एक पे ध्यान नहीं देते। आई गेट बैक टू यू टुमारो मॉर्निंग बोले तो कल छुट्टी है सर कहते। यस बेटा, आर वी ऑल क्लियर अबाउट दिस सर? थोड़ा ऊपर स्क्रॉल करो प्लीज। सुजल अभी देखा बेटा, विच पार्ट? जल्दी मैसेज कर, कुछ छूट गया क्या बीच में तुम्हारा भी? हाँ विच पार्ट गाइस, टेल मी। लेट अस स्टार्ट फ्रॉम द बिगनिंग गाइस। ये हो गया कैश सीडीओ पूरा, सिंथेटिक सीडीओ डन, आर्बिट्रेज सीडीओ, क्रेडिट डिफॉल्ट स्वैप, मैं भी लिख रहा था ना यार। Which is that movie, na? Nice movie, no? That guy is pretty famous. I've seen it long back, so I have to go. But then the way they have pictured it, no, amazing. शॉर्ट करना का इस यूएस मार्केट में कितना बड़ा क्रेज हो गया। तुम सोचो अदानी के उसमें वो एंटिटी कितना कमाया होगा। पहले शॉर्ट पोजीशंस बिल्डअप करो, फिर मार्केट में रिपोर्ट फैलाओ कि द एंटिटी इज ओवर वैल्यूड, स्टॉक प्राइस reduces drastically, then buy the same thing. Remember last year GameStop, you know GameStop बोल के एक शेयर था, GameStop only, no, was trading at $3, $4. It went up to levels of $160. Reddit community as such guys, they wanted to go against the people who have taken short positions, so purposely they tried to increase the price. हाँ बेटा, मैं भी कुछ ऐसा करूँ, सब मिला के अपन ही एक बढ़ाएंगे स्टॉक। Yes guys, Mr. Siddharth here wants to rig the price of Tata Motors, so we will need a capital infusion of about 50,000 crores sir. उसको देख बाजू वाले को एडमिन करते। Yes guys, are we clear about this guys? Is everyone clear about credit derivatives? Any doubt in this guys? Now the next concept that we have is such better as commodity derivatives, page number 5.21. Everyone knows what a commodity. अब यहाँ से बेटा कुछ नहीं है, they're all very normal guys, because whatever we did so far as such guys were stock derivatives. Yes or no बेटा Jeet and Anchal? So what is the thing that I spoke about now? दोनों प्रोफाइल पिक्चर बता रहे और ये अच्छा है क्या वो अच्छा है क्या, शर्म है तुम्हारे को क्लास में? Karan, yes guys, so when we talk about credit derivatives as commodity derivatives as such guys, the underlying instrument here is a commodity. There were 1 or 2 questions guys we did on copper futures, yes or no? For you to execute a commodity derivative guys, there are certain basic principles that the underlying commodity has to be durable, it has to be homogeneous. मतलब क्या guys, the quantity that is available in the market as such guys should be of a uniform quality. If everyone has a different quality of the underlying commodity as such guys, then trading forwards or futures on that beta would become very difficult. You specify the quality of that guys in the trade itself. जैसे तुम लोग अगर गोल्ड के फॉरवर्ड्स फ्यूचर्स भी एंटर करते हो बेटा, then specify the price. Is it 999 or is it 995 purity? It is all 999 purity only as such guys that gets traded in the market. So that is defined as such guys. If that is not defined, obviously beta it is subject to fluctuation. So whatever commodity that we are talking about as such guys should be subject to, so it should be homogeneous commodity guys, and then beta it should be durable. You should be able to store that commodity. You cannot have a derivative future as such guys on a perishable commodity. Perishable commodity cannot be stored as such guys, so you cannot be obviously entering into contracts as such guys for that. Then guys, it should be subject to price fluctuations. If the commodity as such guys is fairly stable as such beta, why the hell will you need a derivative contract as such guys on that underlying commodity? जैसे if you talk about commodity derivatives में as such guys, gold futures, silver futures as such guys are so common. Agricultural commodities में as such guys, there are also forwards and futures contract that are available in the market, but not on every agricultural commodity, and the limit specified also, because government will not want prices of agricultural commodities as such guys to move up and down by huge percentages. अगर कोई speculate इसमें करने लग गया बेटा, then imagine what will happen guys on food inflation. That will have again an impact guys on the entire inflation of the economy. Correct? So these are commodity derivatives as such guys. Why will someone want to enter into a commodity derivative? It is majorly for the purpose of hedging. When I say majorly for the purpose of hedging, you are for you that commodity is raw material, or for you that commodity is a finished product. You want to fix your input price, or you want to fix your output price. Remember I gave the example of gold. A jeweler beta is a wholesaler, he sells gold as such. Did I talk about this earlier? But then he's going to receive the amount after a month. If he waits for a month as such guys and then buys gold after a month, the price is subject to fluctuation. Instead, what can he do? Enter into a futures contract guys, where the contract will get delivered after a month, so that at least his price is fixed. He does not have to worry about price fluctuations. Wasn't that a commodity derivative? Yes or no? So commodity derivatives mein all that you have to understand as such beta is that the underlying security that we are talking about as such beta is a commodity. Are we clear? There can be commodity futures. Commodity futures are what? Exchange traded contracts. Are we clear about this? They can be commodity swaps. Ab swap important hai beta. Say guys, I enter into a contract with Niket. Pay attention guys. Swap mein it is not one time payment as such guys. Swap is for a specified period. I enter into a contract with Niket as such guys, wherein I will exchange the return on gold every 6 months with a fixed return of 3%. I will have to pay him whatever is the increase in value of gold. Every 6 months settlement hoga, and he will have to give me a fixed return of 3%. Imagine gold increases by 1%. I will have to give him 1%, he will have to give me 3%. Net settlement, he will give me 2%. Imagine gold increases by 10%. I will have to give him 10%, he will have to give me 3%. Net settlement, I will give him 7%. So do such swaps are available in the market. It will be over the counter. Over the counter matlab kya guys? Specified contract between two parties. Are we clear guys? So you either or beta we can enter into a contract. This is fixed for floating. Mera return is floating. What I'm getting here is fixed. Or beta there can be another swap wherein I exchange the return on a commodity with say the prevailing repo rate. Repo rate minus 2%. Yahan pe the return is not fixed that I'm going to get. It will be the prevailing repo rate minus 2%. If RBI increases repo rate to say 7%, they kept it constant, but if they increase to 7%, then he will have to pay me 7 minus 2, 5%, and I will have to give him the return on gold. समझ में आ रहा है नहीं आ रहा है? This is what a commodity swap, wherein you're exchanging the return of a commodity as such guys with something else. Are we clear about it? They can be commodity futures, they can be commodity forwards, they can be commodity swaps. Commodity future are exchange traded forward contracts. Forward is a forward contract. Commodity swap as such beta is in wherein you're exchanging the return that you're getting on the underlying commodity with something else. Any doubt in this? Yes or no? समझ में आया? Like commodity derivative, but there is a lot of information given, but then they are only explaining us how a forward works, how a future works. We know how a forward works, we know how a future works. There's no doubt about it. They tell us that what is the advantage of trading in a futures contract. You just have to pay margin and you can get huge return. But you also can make a huge loss. समझ में आ रहा है नहीं आ रहा? जैसे they gave an example guys where some contract is worth 8,700, but then you have to pay only 10% margin. So they're telling us that by paying only 870 rupees, we are getting gain on 8,700, but we'll also get loss on 8,700. So that is commodity futures. There are commodity swaps. You should remember what is commodity swap. Commodity futures you already know. What is commodity swap? Exchanging the return of a commodity as such guys with something else. That something else can be fixed return, that something else can be a floating return. अब लोग बेटा कुछ भी कर सकते हैं ना. What if I enter into a contract as such guys with someone wherein I will exchange the return of Reliance Industries with the return of Nifty? If someone is willing to enter into a contract, can't we do that as such guys? Wherein I will pay return of Reliance, someone else will give me return of Nifty. Net settlement होगा difference in cash. That is also a swap contract. वैसे people enter into interest rate swaps. We will learn that in a separate chapter. Say I took a loan guys at a floating rate. ठीक है, I enter into a swap with Niket, under which I will tell him that I will give you a fixed interest and you pay my banker's interest. समझ में आ रहा है नहीं आ रहा है? So I'm exchanging my fixed obligation with I'm exchanging my floating obligation with a fixed obligation. Swap is an exchange contract. It will be for a specified period. It is not for 1 month. It is not for 2 months. It will be for 6 months, 1 year, 2 years, 3 years. You are exchanging the return of something with something else. Is that clear? Are we clear about this? वैसे ही बेटा we have something called as weather derivatives. Weather हो गया बेटा chapter. Weather derivatives का मतलब होता है बेटा that it is like insurance. It is not a derivative. Underlying is weather condition. So depending on the weather, this is basically taken by those entities as such guys that are heavily affected by change in weather conditions. Imagine that the rainfall is below average as such guys. If the rainfall is below average, that is going to affect the prices of all food because the harvest might be very less. If the harvest is less, food inflation will be very high as such guys. Food inflation is very high. FMCG companies will have to pay more on their inputs and it is going to directly impact their profits. So I take an insurance for this. It will be called as a weather derivative because यहाँ पे underlying क्या है बेटा? If there is a normal increase in food prices, it will not be taken care of. Say if there is a war as such guys again, Russia time pass में वापस bomb फेंक रहा है. Because of that again food inflation increases because Ukraine is also a very big supplier of food grains. So if there is a supply, this thing as such better. Now this is not protected by weather derivative. Weather derivative will cover increase in food prices only on account of weather changes. Not necessary food better, the underlying, matlab, it can be impact on anything. So this will be taken by those entities whose profitability gets affected by a change in weather condition. And it does not have to be extreme weather conditions also as such guys. Just if the temperature goes above as such, जैसे बेटा Middle East में guys, if the temperature crosses 50 degrees, it is supposed to be a holiday. मतलब वहाँ पे normal है guys. तो लोग क्या करते हैं guys? Even if the temperature is 52, the national state agency that reports it as 49.9. Because we cannot give holidays every day as well. But socho guys, because of an increase in temperature, if the factories are shut, is it a weather condition impacting your profit? You get a reimbursement because of that weather derivative. All of that calculations will have to be made prior only. You cannot do those calculations later. How the amount will be calculated will all be determined earlier. Are we clear about this? Yes or no? Weather derivative का मतलब ये नहीं होता है that you are betting on weather. Please understand that. Students, मतलब सबको ये लगता है कि we are betting on weather conditions as such guys. We are betting on the impact on profitability because of a change in weather conditions. So if weather conditions change, how is your profitability going to get impacted? Will it be exchange traded or will it be over the counter? Obviously over the counter guys. Exchange traded नहीं हो सकता है. And this valuation is very complex guys. Because you'll have to anticipate weather conditions as such guys and see what is the likely impact. ये all started weather derivatives because of that. क्या है वो El Nino effect. Warmer oceans as such guys causing lesser rainfall as such better. Because of that, the profitability of many US companies got impacted back then as such guys. So this is where a new product came into market called as weather derivatives. इसके बाद में आता है electricity derivatives. Very famous in India now. Energy exchange, IEX as such guys. What is IEX? Full form correct है बेटा, Indian Energy Exchange, but it's a platform as such guys which is bringing together all the buyers and sellers of electricity. Electricity में बेटा usually there are power purchase agreements entered into, and those power purchase agreements will not be for a span of 2 years, 3 years. They'll be for a span of 25 years, 30 years. जैसे I have started a solar plant as such guys. Either a local player as such guys. सुनना बेटा, either a local player as such guys or the government might enter into a power purchase agreement with me for the next 30 years that they will buy power from me as such beta at this price per kilowatt hour fixed. So I will have to supply power as such guys at this rate only. So those are power purchase agreements. But these days guys, we have got electricity forwards, we have got electricity futures, we have got electricity swaps in the market wherein people can trade in the rates of electricity as well. Just if you go to IEX as such guys, they will tell you that the spot rate is about 4,000 rupees per kilowatt hour. Abhi prevailing rate. It keeps fluctuating as such guys, depending on the availability and supply. अपने पास कभी कभी excess supply है तो we supply to across the border to other countries also guys these days if there is surplus electricity generated. But India ka population beta growing strong, we will always be energy deficit at least in the next couple of years as such guys. We are expanding the energy base, so this is where we need electricity contracts, derivatives as such guys, where the underlying is the price of electricity only. If I enter into a forward contract with someone, it basically means I'm entering into a contract to buy or sell electricity at a fixed price. Futures are exchange traded, IEX. And then guys, there is electricity swap. Under electricity swap as such guys, it is not electricity swap ka matlab hota hai beta, it is like multiple forward contracts for multiple dates clubbed into a single contract. Under electricity swap as such guys, you can exchange electricity say for a fixed amount as such beta, or you can exchange electricity rate of one location with electricity rate of an other location. Swap will always be for multiple dates as such guys, not for a single date. Are we clear? So there is electricity derivatives, there are commodity derivatives, and then there are weather derivatives. Are we crystal clear about all of this? Yes or no? Underlying याद रखना guys, देगा तो भी क्या theory question 4 marker, you should be able to explain the concept, that is most important. Are we clear? Any doubt in this? Chalo beta, we will now start the next chapter, officially done with derivatives. So old batch students beta, these are the new concepts that were added in derivatives. I'm now starting the next chapter.